Money FM 89.3. Best of breakfast. Companies to watch.
That's right. Thanks for joining us. And I can always count on Dan Koh to deliver the goods every morning. So what do we have today?
Good morning, Ryan. How's midweek for you?
Pretty all right. As usual, nothing unusual, at least I think, so far this morning.
Yeah, hopefully that stays the same. Welcome to Companies to Watch. That's a segment where we spotlight and stock you up with ideas of listed companies that will call for your attention. So we're looking at market trends to risks, as well as hidden gems or warning signs to steer clear of. 8855-0893, text us and tell us whether you think it's going to be a hot or not. Ryan, when was the last time you sent a parcel?
Oh, gosh. Probably last year for Christmas.
Oh, what did you send?
I cannot remember anymore. It's all blur. But yes, that was the last time. I don't really get to do these things too much.
All right. I would say so myself. I mean, I don't think I remember the last time I sent a parcel overseas.
More of ordering the parcels into my house.
Oh, yeah, that's a very common thing in my household. But yes, we're returning to a company that's often referred to as an economic bellwether due to its broad exposure to the global economy. Its performance is closely watched as an indicator of overall economic health, because it ships a vast range of goods, connecting businesses and consumers worldwide. I'm talking about FedEx, and it looks like recently they've reported their financial results, and we will be watching that very closely as it's often seen as a barometer for consumer spending, international trade, and overall economic activity. So let's dive right into their latest financial report, shall we, Ryan?
Let's go. Unpack it.
Okay, in their latest fourth quarter financial report, FedEx announced the better-than-expected quarterly earnings and revenue as the company had announced that it has achieved its $4 billion cost-cutting goal and will aim to trim another $1 billion in its upcoming fiscal year. So this is how they did. Earnings per share came in at $6.07. That's higher than the $5.84 expected. Revenue came in at $22.22 billion, also higher than expectations at $21.79 billion. FedEx also reported that the U.S. daily package volume was up by 6% year over year. U.S. ground home delivery volume specifically was up 10%. The company reported net income for the quarter ended May 31st of $1.65 billion. That was significantly higher than the year earlier. Revenue for the fiscal fourth quarter rose to $22.22 billion. That's also higher than a year earlier. And for the full year, revenue was up $87.9 billion. That's higher than the $87.7 billion in the fiscal 2024. What do you make of the results so far? It seems like it's green on the screen.
Yeah, it looks like numbers are going up. I guess the cost cutting is helping to some extent. You talk about the deliveries of parcels also going up. So that's a good piece of news, because you imagine that with all the purse tightening and cutting back spending in some quarters, people might be ordering or shipping less. Well, it does not look that way. So it does look encouraging.
It does seem like people are still pumping money into the economy. People are still spending. And according to CEO Raj Subramaniam, the company achieved its structural cost reduction target in the face of ongoing headwinds as well. And that's a lot to cheer, but it doesn't seem like investors were exactly happy with the results. And that's after the company also forecasted a worse than expected profit for the current quarter. That's a sign that soft demand from consumers and businesses rattled by tariffs is unlikely to improve in the near term.
So the tariff impact is not factored in yet, in the numbers at least.
I think that's a bit of a lag effect of sorts. So I think at least FedEx is taking that into consideration, especially when they're forecasting their future results.
Not just the effect. I'm wondering if there's a front loading of it, because people are trying to preempt these tariffs, so they ordered more. So I'm not sure how much of a factor that we have to discount in this quarter.
That's a good point you raised, Ryan. Thanks for that. Now, FedEx did announce that their adjusted earnings in the fiscal first quarter will be $3.40 to $4 a share. That's well below the $4.03 average of analyst estimates. And although it typically provides a full year forecast, FedEx did say that it would only share its outlook for the current quarter, and that's due to uncertain global demand environment. So it does reflect, the uncertainty, and that the current economic outlook might be a little bit hard to navigate as of the moment. So I think they try to stay clear of providing more clues because it's hard for them to look ahead.
Yeah, they're not alone because many other companies have also been withdrawing their outlooks, their projections because there are so many moving parts right now.
And when you think about President Donald Trump's erratic trade policies and how it's continuing to weigh on consumers and businesses alike, that is not shaping out to be a very good sign for most companies like them. Well, the earnings report, Ryan, also comes just days after the death of Fred Smith, FedEx iconic founder who revolutionized the parcel shipping business. Now, let's dive a little bit more into who the founder was.
This is just over the weekend.
Yeah, this just happened over the weekend on Saturday. Frederick W. Smith, the founder and executive chairman of global freight transportation and logistics services provider FedEx, had sadly passed away on Saturday, June 21st, at 80 years old. And in a message, Subramaniam, the current CEO, wrote that Smith was more than just the pioneer of industry and the founder of FedEx. He did say that Smith was, after all, the heart and the soul of FedEx. It's PSP, People, Service, Profit. It's culture, values, integrity, and spirit. And it seems like a lot of people within the various industry and the various stakeholders provided no shortage of remembrance of him, because many of them had known him as a legend, a pioneer, an icon, and a great loss not just for the company, but for the industry and the overall corporate world.
Quite a titan in the business world. When you think about it, he's the guy who built FedEx from nothing. So pretty much he's the guy who put everything together, the planes, the networks, the routes, the deals, and so on. Yeah.
Exactly. And revolutionizing the express delivery industry to a point that it's been given the status as the bellwether of U.S. and global economic activity, where investors often look for clues for strength of consumer and corporate demand. So I think that says a lot about how much of an influence he has had on the company. So Smith was actually born on August 11th of 1944 and worked as a charter pilot and earned his degree in economics from Yale. And did you know that he was actually in the United States Marine before he started his company? And he did 2 tours in Vietnam before leaving the military in 1970. And in 1973, he launched the Federal Express with a fleet of just 14 Dassault Falcon jets. So when he founded FedEx, his mission was very simple: just serve the rapidly growing high value-added sectors of the economy, as stated in the FedEx's bio. And did you know that, according to Smith, he came up with the name Federal Express because he wanted the company to sound big and important, when in fact it was just a startup operation with a future far from assured.
Yeah,
Does it give you?
Bigger than FedEx, so FedEx as well.
Yeah, I suppose it goes in some way to give you the impression that this might be quite a large corporation after all. So yes, at the time, Smith was still trying to land a major shipping contract with the Federal Reserve Bank, and that didn't work out. But fast forward today, look at what FedEx has become. A $90 billion plus company employing more than 500,000 workers and serving more than 220 countries and territories. Verdict for me, having considered everything, I'm probably going to go with a not for FedEx as of now. What about you?
With so many moving parts, we talk about tariffs, we talk about the Middle East conflict, we talk about companies being more cautious. There are a lot of reasons to be worried about where things are going. So on that basis, I'm probably going to sit on the sidelines on this one.
Yeah, this would be a tough one as of now, especially since they didn't exactly give a very rosy outlook for FedEx. As of the 25th of June, it seems like TipRanks, Yahoo, and Barron's had all given it a buy rating.
Yeah, that's before the earnings came out.
That was way before the earnings. All right, Ryan, and that would pretty much do it for our analysis of today's Stock in Focus, FedEx. Now, did you know that in 1973, 3 years after the company's birth, FedEx was on the verge of bankruptcy? The company was losing $1 million a month, and Fred Smith was unable to raise capital, get loans, and attract investors. So you know what he did? There was only $5,000 left in the company, which wasn't enough for the company to continue operating, of course.
What would you do?
So he decided to take drastic action. He went over to Las Vegas and he spent the weekend playing blackjack with the company's funds. He returned to the company's headquarters on Monday and told executives that he managed to turn $5,000 to $27,000 just by gambling.
Really betting on the future of the company.
And soon afterwards, the company captured $11 million in funding, and 2 years later, in 1976, FedEx recorded its first ever profit of $3.6 million.
Wow, it's really one of those turning points in the company. Quite interesting.
Fascinating, huh? So why didn't FedEx and UPS work together?
Why? UPS, of course, is the postal service in the US.
They didn't bother trying because they became fed up with each other.
What? Okay.
Here's a FedEx joke, Ryan.
Right.
Actually, you get it tomorrow.
All right.
Okay, and that's all we have for FedEx.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.